What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 31st of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to be talking about the three major narratives I'm excited about going into 2024 in the event that altcoins and the broader crypto market continue to expand. And today I'm hoping to not only talk about plays that could potentially outpace Bitcoin, but the broader crypto market as a whole, because in an industry where there are over 2.2 million cryptocurrencies, that's right, 2.2 million according to CoinMarketCap, we have got too much opportunity out there, and we need to focus on filtering out the noise and focusing in on the signal. Getting down to the top 0.1% of cryptocurrency investment opportunities that remove a lot of the risk and give us a lot of potential upside in the event that things continue to rally. So we've got a lot of things to talk about. I'm going to talk about some of that curtailing that we need to do, and beyond that, some of the narratives that I've really gotten excited about as I've done my research over the past couple of months. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Now, I want to go ahead and start by talking a little bit about a video we just did a couple days ago. We talked about our top altcoins to watch in the month of February, and we focused in on three critical projects that we're keeping on our radar in different types of focuses and narratives. One of those projects we talked about was Stacks, another one was Render, another one was AngelBlock, and all three of them have continued to rally over the last couple of days, with Render being one of the top performers in the top 100 coins over the last 7 days, and outside of that as well, with AngelBlock or Thol, the native token, going up over 200% since we were talking about a week ago. So how is it that we're able to spot these plays that could really make sizable returns to the market and lead the pack forward? Well, it has to do with our filtering mechanism. Unfortunately, a lot of people just go on a whim and buy the altcoins that they like because the narrative is exciting for them, or for example, it's just something that they saw, they like the logo or brand, really simple surface level things. We need to get a bit more critiquing here when it comes to our capacity to figure out which plays we're going to be buying. We need to be more specific. We need to focus in on categorizing cryptocurrencies, the 2.2 million that are out there, into their basketed narratives or categories. Essentially focusing on things, for example, like layer 1 or layer 2 infrastructure, gaming, or DeFi, all these different categories we can think about. And once we can start to basket them into categories, we can start to figure out which sectors are starting to perform the best. Generally speaking, which plays are leading the leaderboard here, and basically on a 7-day or 30-day time frame are continuing to outpace the performance of the broader market. And this really comes down here towards categorization and focusing in on price performance. Now, I'm going to be also talking about some plays today that may not be leading right now in regards to price that you should keep an eye on, because the third element here beyond categorization and focusing on price action is focusing along with that as well on those who have strong fundamental opportunities behind them. That is, they're tapping into untapped areas in the crypto space. They are fixing huge substantial issues that are multi-billion-dollar problems or bottlenecks in crypto for further adoption. So these are kind of the three things that I would utilize here, and I promise if you spend some time here and you apply them properly, you'll be able to filter out easily 99% of the plays. And from there, it's about doing some due diligence on getting down from that top 1% down to the top 0.1%. The second thing you want to focus on from here, the second kind of step after we've filtered down to the top 1%, is to focus in on plays that are the top performers in their given industry, or narrative for that matter. And outside of that as well, we want to find plays that offer a good risk-reward ratio. We don't want to just go for small caps, and we don't want to just go for the largest plays. We want to find those that have the opportunity here for markets of scale, but also are established enough so they're not rug pulls, scams, and a whole range of other areas where you can just end up losing everything in the crypto market. And after you start doing that, if you really start filtering it down towards projects that have substantial documentation, are open source, have an actual network effect behind them, you start to get down to the quality plays that can easily make 10 or 20 X's in the event of an altcoin cycle or a broader expansion. I know I rambled on a good amount here. I know you guys are probably excited to look into the narratives, but if you've been patient enough to stick around here, I think you're going to do much better than most people, because you have to understand these principles rather than just knowing the narratives that someone's going to tell you about. Because the narratives I'll talk about here today, while they excite me, at the same time, they need to continue meeting to this criteria. And if they don't, they could fall behind amongst other narratives, many of which we may not even cover here in today's video. It's an important thing to accept. So now that I've gotten all that out of the way, let's go ahead and spend some time to talk about the first major narrative we're watching in 2024. This narrative has many different labels and terms that people use to describe it, but generally speaking, you'll probably hear terms like distributed computational networks or DePIN, which stands for Decentralized Physical Infrastructure Networks. Now, why is this narrative exciting? Well, this narrative is focused on a basket of projects that are focused on allowing you as an individual to participate in a distributed network of other participants who are facilitating computational resources or some type of technological resource for a whole range of different use cases and applications. It could be providing bandwidth or internet capacity, or more particularly, where we're really excited in is the concept of providing GPU or CPU resources from your computer, like the one I'm using to record right now, that may be remaining idle, that could be utilized for very valuable applications across the world. This could be things like generative AI, research, and a whole range of other things that require these heavy amounts of resources. And right now, it's an ultimate time to be focusing on this and to tap into this distributed network capacity that's just starting to really grow, because as we take a look across the world with the advent of generative AI, there's been a huge surge in demand for GPU capacity. In the case of Render Network, which has been one of the more established projects in this industry, we can see that Render's been one of the best performers, and it's a big reason why we talked about it in our recent Top 3 Altcoin video. But there's also other projects that are competing in this industry, plays that have established network effects, but still have that ability to make serious markets of scale beyond even larger players like Render. That's why I want to spend some time today to talk about our sponsor, which is none other than Dynex. Dynex, similar to Render Network, is aiming to build a large-scale distributed computational network, allowing for people to utilize on an individual basis their idle GPU or CPU resources to facilitate a whole range of jobs across the world in order to fix major societal challenges. And this is again in a range of categories for different types of digital tasks. Things like artificial intelligence with the advent of generative AI, healthcare, science and research, and a whole range of other major real-world use cases. This is actually what makes Dynex and these networks so powerful, is that they're focused on proof of useful work rather than using a ton of computational resources just to validate transactions on a blockchain network. In this case, proof of useful work is actually facilitating computational resources in order to complete real-world tasks that have real-world impact. And I think that this is really cool because with Dynex, they've been able to get some of the lowest cost for GPU-related activities. So essentially, you can access a whole range of global GPU resources that would usually be idle at some of the lowest potential costs versus traditional centralized infrastructure through AWS or other major providers like Azure. And beyond that as well, what I like about Dynex is that unlike a lot of the other networks out there, there's a wide range of language frameworks supported. So Python, PyTorch, and Google's tools would usually not be available to a lot of people in many of these applications. But you have all the major language frameworks that are required to do a lot of the jobs or tasks that people would require GPU resources for. And I think above all, not only is the low cost element of this really nice, but outside of that, Dynex itself has one of the largest network capacities. They have over 181,000 GPUs being utilized globally, servicing over 1,900 completed tasks since back in December of 2023, and just a matter of about a month and a half since launch. So if you guys are interested to add another project to your radar, I definitely recommend checking out Dynex. It's one of many projects out there that is in that really good range of being a small mid-cap play in the crypto space that's focused on actually providing a real network of real adoption and providing a massive amount of GPU resources on a global scale. I think overall that projects like this that have that potential to grow along with the broader narrative and have a much bigger market scale potential is definitely one to keep an eye on. Above all though, it's really exciting to see that for the first time in history, if you think about it from like a broader narrative perspective, not only can you earn passive income by providing your idle resources, which would have just been sitting there and not earning you anything, but outside of that as well, you're able to contribute towards real world challenges. And it gives practically everyone from a startup to a Fortune 500 company or university the ability to access these resources for really complex tasks at a fraction of the cost that it would usually be. So this is again, as a total win-win for a whole range of people, and it can help to fill the void of a lot of the missing GPU resources globally speaking. So overall, this has been a narrative that I'm really excited about here, and it's why I continue to watch plays like Render as well as Dynex that are facilitating these needs. And there are other different types of DePIN plays out there. There's Helium Network, which is focused more on providing bandwidth or a kind of decentralized internet that you can access from a variety of different locations in the world. there's a whole range of different projects out there, and I'd recommend you guys do your own due diligence on some of these projects as you go through. But for me, I really like to focus on these networks that are focused on providing GPU resources. The big demand right now is for AI, and I don't see that going away in 2024. Whether or not we see artificial general intelligence in the next couple of years is besides the question. Generative AI already has a lot of demand right now, and for the existing demand right now, there's a huge supply and demand imbalance. A perfect use case of cryptocurrency incentivized networks for providing these resources, matching a needed demand in the real world for real applications. Gotta love it. For me personally, that's one of the exciting narratives here. And it's how crypto is starting to branch out and become more mature as an asset class, servicing the needs of other industries. The next thing I want to talk about here is alternative layer 1 or layer 2 protocols. Now, I understand that this is a very broad topic, and I understand a lot of people have their favorite L1s or L2s. It could be all the way from Ethereum being the leading L1 or L2, or excuse me, layer 1 in the blockchain space with smart contract capabilities, all the way down to players like Binance Smart Chain, Polygon, Arbitrum, Optimism, Cardano, Avalanche, Solana. There's just a whole basket of layer 1 and layer 2s out there. And to be completely fair, many of them don't do much better than their original counterparts. They usually fix one issue like scalability, or they offer some kind of niche use case or benefit, maybe different programming languages. Look, having one of those problems solved is cool. But in order to actually really stand out against the competition, you need to offer major transformative opportunities for new applications to be built. You need to listen to developers and build the right experience and make sure that you're actually not only going to be able to scale for a larger amount of transactions, but be able to provide the ecosystem for applications or use cases like DeFi or NFTs or real world assets, some of these kind of micro narratives in the crypto space to be able to be utilized on this L1 or L2 protocol. And that's why I want to talk about some of the plays here that really excite me. Plays, for example, like Radix, as well as Alt0. Now, for me, the reason why I focus on these plays is because they are focused on making transformative changes in the way that these L1s operate versus just, for example, taking the Ethereum network or something that's working and maybe making some tweaks to it. That's basically what Binance Smart Chain, Polygon did. They just either changed the consensus mechanism or a few minor tweaks on the network, but they're still just core EVM compatible chains. And in the event of other L1s that have attempted to actually try to break the rules and build something new, networks like Solana, for example, you had consistent downtime or really high infrastructure costs that really aren't going to make the protocol sustainable long term. But for me personally, I like to look for networks that are able to not only bolster high amounts of transaction throughput, but beyond that as well, they've got an entirely new language framework for developers that dramatically simplifies the developer process, removes the ability for smart contract exploits on wide scale, fixing a lot of the issues of programming solidity, and outside of this, well, gives the user experience that people deserve that unfortunately we have not had in the crypto space for a long time. Radix, as many of you know if you've heard me talk about it on this channel over the last 2 years, I've been covering Radix for a long time, and I really think that Radix is one of those sleeping gems that even if it's not having its time now, I think it eventually will. And I think it's one that you guys should keep in your radar. The same here with Alt0. What you see here with a lot of these protocols is in the case of Radix, over the last year or so, it's been relatively neutral here in its trend. Alt0 in a similar position since back in February 2022, it's been trading generally sideways. But for me personally, while I'm not saying you need to go all in on these plays right now, guys, and while they definitely aren't meeting that first criteria we talked about around price action, I think it is important to keep an eye on this narrative and to keep an eye on these quality plays that I think lead in their respective narrative when it comes to the fundamentals. Because at the end of the day, if you have these on your radar and you can set the criteria to look for in order to actually make an entry when you see the price momentum come in, you'll at least have them on your radar and you're not going to only find out about them when they're already in the top 100. What I like about these plays here is that for Radix as well as Alt0, they're much smaller plays comparative to cryptocurrencies like Solana. Both Radix and Alt0 are sitting around a $400, $200 million market cap last time I checked. Maybe it's a little bit more or less at the time of recording, but if you compare that to, say, Solana, which is in your $40 billion plus network when it comes to its market cap, or Ethereum, you are likely better off here having some fractional exposure to some of these plays. Having, for example, a fraction of your portfolio allocated to a sizable amount of these L1 plays that could be radical transformers in the crypto space. And even if just one of them works out, usually tends to be if altcoins are trending out all plays are going to bode well. But if you really have one that just really knocks it out of the park, whether that be Radix, Zero, another play, you can be able to far outpace the established large cap plays like Solana, Cardano, Ethereum, Binance Smart Chain, you name it. We want to find new plays here that have the opportunity of markets of scale. That's a big element we want to look for. And along with that as well, buying them on the lower ranges here can be favorable not only for some short-term swing trades, as we've seen here both in Radix and Zero, but outside of that as well, sometimes they can be building long-term technical formations like this descending wedge, which is a bullish pattern here. And it's over a long period of time, which could give it a lot of springing momentum once it finally breaks through. You can also as well utilize the resistance band here on the Lux Algo or the support band as well in order to find potential entries into these different plays. If you guys are interested to get access to the Lux Algo indicator, this is the signal and overlay indicator we like to utilize on this channel, and I like to use in my analysis personally, then you guys can check out the link down below in the description to the Lux Algo indicator suite. There are a whole range of other indicators within the suite. This is just personally my favorite and the one I like to use in my trading strategies. There's also the price action concepts indicator and a whole range of other ones that are going to give you some insights into price action. Lux Algo is one of our partners here in the channel. We've been working with them for a long time, and I think that they've got a really great opportunity for a lot of you out there to get some insights on the market in regards to analyzing price far beyond just analyzing price itself, getting to spot potential resistance or support ranges for price. And outside of that as well, we've got to talk about the third narrative, and that is one that you guys have probably heard me beat like a dead horse to the end of time, and that is Bitcoin infrastructure. Now, I have to tell you guys here, the reason why this narrative really excites me here is that in this market right now, I know a lot of people have different opinions about where crypto's going. Many people believe that we're in a absolute bull market, just like we have been over 2020, 2021, or back in 2017, both of which I've traded through and how those feel to a large extent. I also have my skepticism and reserves as to whether or not we can really see a massive altcoin cycle or really see this kind of rising tide lifts all boats scenario where all altcoins just go bananas and everyone's just speculating. I think we need to focus in, again, not only on the narratives that excite us, but the ones that are poised to benefit best. And in an environment where the only major news story over the last year, if we're being honest with ourselves, guys, the only major news story that people have been excited about is the Bitcoin ETF. And I say that just to be realistic, one-on-one with you guys. And not to mention the halving event as well. That's maybe the second most talked about topic, widespread. And maybe I thought about an ETF for Ethereum or something now. But it was the ETF for Bitcoin. That was the big topic here. And now that that's out, we really need to see whether or not that ETF is going to show up to the plate. If it doesn't, this could be bad news for Bitcoin and the broader crypto space. In the event, though, that it does start to prove as a valuable entrant of new liquidity and scoop up a lot of the demand for Bitcoin, rising the price of Bitcoin and the overall value of the Bitcoin network, I think a project, a layer 2 like Stacks, and other network projects that are focused on giving smart contract capabilities to those who hold Bitcoin, I think are going to win out big time. Especially when you consider the valuation range from some of the even most established plays like Stacks, which are just sitting right now at around a $2 billion circulating market cap, or $2.7 billion. So give or take $2 to $3 billion versus Solana, which is practically a ghost chain, which is just people speculating on meme coins, no real new serious applications. Ethereum, even the biggest programmable layer within the crypto space that owns the majority of the DeFi market, is just a couple $10 billion. And if you're talking about the market cap of Ethereum, you're talking about a project here that is over $277 billion. But in the case of Bitcoin, you have a network capacity of over $837 billion of liquidity that is not being tapped into, roughly 3 times larger than Ethereum as a network. I don't know exactly if it's going to happen. If we are going to get those ETF flows. You guys have heard me be quite candid on the channel here. They're not looking good right now. But if the ETF flows start to get impressive, if institutions really start to go, and if we get that wrong, trust me, guys, I'm not so bearish here to be ignorant of the fact that that could play out. And I'm going to have the plays here and the narratives, I'm going to have my sights focused in on that have the opportunity to easily 10x and far outpace Bitcoin. And the narrative of being a programmable layer for the Bitcoin network, a network where you can usually just do Bob to Alice, sending and receiving transactions and ordinals, whatever. This is where I really get excited. This is a fundamental play here. They have a real language framework. In this case, they have Clarity, which is their programming language of the network that allows you to build smart contracts with Bitcoin as the core currency. And Stacks, similar to Ethereum, services as the kind of gas or transaction fee token on the network in order to engage in transactions. It's really streamlined. And I think as the infrastructure continues to build out around Stacks, the amount of applications that can be built here are going to be huge. And these things take time. It took years for Ethereum to really get in the spotlight and start making a trend, about 2-3 years from its initial ICO and launch. Perhaps over the next year into 2024, we really start to see Stacks as an ecosystem build out. And there are other plays out there, no doubt about that. There are other Bitcoin infrastructure plays, things like Thorchain. There's, I would say, probably 2 or 3 other plays that are aiming to build like EVM compatible networks on top of the Bitcoin network. So you could build and fork basically existing applications like Uniswap or Compound or all the traditional DeFi applications and have Bitcoin as the core currency. Yeah, sure, there are other projects out there like that. But I have to say, from the available tokens you can invest in and from a risk-reward adjusted perspective, sometimes it is best to go with the larger cap play on the narrative when you consider that it is only at $2 billion and has the easy ability here to make multiples from this point on, especially with a further Bitcoin expansion. That's my thought process here, guys. So again, I don't want to say the sky is the limit and there's no limit to it. Of course, if the ETF flows don't look good, then I think that's going to be bad news for all the narratives we're talking about here, maybe irrespective of maybe distributed computational networks or DePIN. But again, I think these are the kind of areas we need to focus on. And we mentioned some good projects here today. We talked about Render, Dynex, we talked about Stacks, we talked about Radix and Aleph Zero. These are some quality projects you guys can keep on your radar. And again, they're not just here just sponsoring the video, guys. This is me talking about them candidly and letting you know that these are the projects that I personally like and look for in the market. And they have the kind of qualities that we look for in projects. Projects that are leading the way forward, that are continuously building and developing, that are fixing real issues or addressing new, entirely unaddressed markets, that have exciting narratives and strong price action to back them. So, I rambled out a good amount here today, guys. I hope this video proved valuable for you in your research. Definitely go out there and do your own due diligence. I know you guys will be able to find the plays that are right for you out there. And it's not about getting it absolutely right, timing every bottom or top, but generally our goal is to outpace Bitcoin and be able to make sizable returns over the long run. If you can do that, you're in the right hands here when it comes to the market. So that's it for today's video, guys. Thank you all so much for tuning in. Again, if you liked it, consider dropping a like, and feel free as well to check out Dynex. Check out Lux Island down below in the description. It's a great way to support the channel and the work that we do here. But I hope you guys have a fantastic day wherever you are, and I'll see you guys on Friday at 6 a.m. Eastern Standard Time. Take care, everyone.